Jim, well, you know that I'm going to talk to you about commodities, first of all, right?
Okay.
I mean, you're the commodities guru. Okay, I know that the last few times that you've been on Bloomberg, you've said, commodities are the place to be. It's the only place where it's fundamentally sound. Where in commodities exactly do you want to be right now?
Well, right now I would be buying agriculture, but I'm sure that's what I told you last time. And agriculture is the area of the commodities that is most depressed on a historic basis. There's some things like silver, palladium, natural gas that are very depressed, but as a class, agriculture is the most depressed.
Distinguishing within that, though, I mean, what about rice, sugar? I mean, where exactly in agriculture?
Well, sugar is making 30-year highs, but sugar is still 70% below its all-time high. Just to show you how depressed agriculture is, it's the highest it's been in 30 years, and it's still 70%.
And rice, the same thing. It's been rallying.
Yeah, all these things are going up some right now, but they're still unbelievably depressed from their long-term old highs. Rice is one, and there are huge shortages of rice developing, unfortunately, in the world. The inventories of food, Betty, are the lowest they've been in decades. Not years, decades. We're probably going to have a food crisis sometime in the next 5 or 6 years, if not before.
Well, you certainly heard a lot about rice shortages, and of course we all know about the riots that have erupted because of that. So
they're going to be more. They're going to be cursing people like me, saying, "You evil speculator, you're making money on food, etc." But the point is, the reason I bring that up, if the price of food doesn't go up, we're never going to get any more rice. Nobody's going to go in the fields and work 12 hours a day in the hot sun and get sweaty so that we can all have cheap food. You think the politicians are going to be shrieking at the speculators, the evil speculators. They're not going in the fields to work for nothing. TV journalists aren't going to go in the fields and work for nothing so that we can all sit and have caviar and pate and champagne. No, the farmers have got to have higher prices or we're going to have a disaster.
You didn't by any chance get those Bloomberg sugar packets, did you?
Certainly. Why
on the way out.
Bloomberg.
Okay.
Fill up on my commodities.
So Jim, okay, but of course, a lot of people when they think about commodities, they want to look at some of the more liquid ones or the ones that that get a lot of press. And we're talking about gold, we're talking about oil. Gold right now trading at almost $1,200 an ounce. You've said before that within a decade you believe gold will be at $2,000 an ounce. Is there any possibility we could actually get there sooner rather than later?
Of course we could. We could also go to 700 before we get to 2,000. No, there's a very good chance. The way they're printing money in Washington and capitals all over the world, whenever people have printed money like this, it's always led to higher prices of real assets. 2,000 in 10 years is not a very radical forecast. I mean, that's what, 5 or 6% a year would have to go up. No, I'm sure it's going to get there. I have very few doubts about that.
But I
want to tell you one story. I was speaking in Prague last week to a room of 300 really successful big-time investors. We did a little survey. How many people here have ever owned gold? 76% of them had never owned gold. So you can see how much scope there is for the price of gold and all commodities to rise. These are big hitters. 76% had never owned gold.
But some would argue, though, that we're never going to go back to the gold standard, that the demand is not going to be, that a correction is only inevitable in gold right now. It's gone up too far, too fast. What do you say to that?
Well, of course the correction's inevitable. Gold went up something like 50 or 60% in 3 or 4 months. That if it doesn't lead to a correction, then it's a problem. If gold gets to 2,000 this year, I'll have to sell it because then you got a mania taking place. No, I hope gold continues to go up like this. Then we'll have much higher prices down the road. Anything that goes up too fast always has a correction.
But my argument though is that people are saying that there is a secular downtrend in terms of demand for gold. We're never going to go back to the gold standard, for instance.
I'm sure we won't. But then I suggested all those people go out and short gold. No, we don't have to argue about it. The market's going to let us know. Sometime in the next 10 years, I suggest that gold will be 2,000. The people who think it's not should sell gold short. It's that easy. We don't have to fight about it.
And Jim, I know that you're a long-term, you look at the long term, but just short-term for let's say, the next 12 months in gold. You expect there to be a correction?
Yeah, of course. There's always corrections. If anything goes up for 12 months without a correction, you sell it. You sell it 12 months from now. But the real answer to that, and you know the real answer, is I'm the world's worst market timer. I am hopeless at short-term trading. If I even talk about it, I should get struck by lightning. I'm no good at it.
What about oil prices? Let me ask you the same thing for oil prices.
Same thing. Oil's been very strong this year. It should have a correction. Things that are very strong. are supposed to have corrections. If they don't, it's a very dangerous thing. So it wouldn't surprise me at all if oil. But longer term, Betty, we still aren't discovering any oil. The known reserves of oil continue to decline. So we have to have much higher prices of oil over the next several years, whether we like it or not.
Where do you see oil in a decade?
200, 250, who knows? It'll be much higher, much higher. Listen, but eventually they're going to be finding a lot more energy, whether it's oil or what, I don't know. If oil gets to 200, they're going to drill for oil on the White House lawn, I assure you. Mr. Obama's going to learn how to speculate. If it goes to 300, they're going to drill at Buckingham Palace. Now, higher prices will eventually bring out new supplies of something, and they will reduce consumption.
Now, Jim, okay, obviously you love commodities. You say you say that you like buying. Okay, let me rephrase it. Obviously, Jim, commodities, you're very bullish on commodities. However, is there no other asset class? Is there no other investment out there in this world that you also think is cheap on a relative basis?
Well, we're going to have currency crises or semi-crises in the next, we're already starting, Brazil, what happened, Vietnam, devalued last week, a week before, Dubai, we've got plenty of currency crises coming, and it's building up now. So I suspect that if one's any good at it, will make a lot of money in foreign currencies in the next couple of years. There's some I own.
Like what?
Well, I even own more U.S. The last time you and I spoke, I was bearish on the U.S. dollar. I'm still extremely bearish on the U.S. dollar, but I own more dollars today than I did a couple of months ago because there's so many bears. Betty, everybody in the world is bearish on the U.S. dollar. Normally that leads to a rally. Now, I'm a horrible trader. I'm sure I'm going to lose money because I'm trying to be a short-term market timer or trader, but I own more dollars than I did a couple of months ago.
That is so interesting because before you used to own more yuan, right? Chinese yuan than anything else.
Well, I still own more renminbi than I own U.S. dollars now, and I own more yen, etc. But I have been accumulating dollars. Don't get me wrong. No, I'm not going to put my whole net worth in U.S. dollars because I know I'm a horrible trader, and I'm sure I'm going to lose money. I'm just trying to time something.
But this is interesting. Jim Rogers betting on a dollar rebound.
Yeah, well, that's what I said. I'm sure I'm going to lose money. I deserve to lose money because I know I'm no good at it, short-term trading, and here I'm trying to do it. What you should do is watch Bloomberg. They'll tell you every day what's going to happen to the dollar. There are plenty of guys on Bloomberg who can give you the short-term and the medium-term. I'm not smart enough to do that.